Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex quick look at the Euro versus US dollar. Today's date is Friday, July 28th. TGIF TU. We're heading into the weekend. We had better PCE data. The US yields are lower. Trading here today, and the dollar is a little bit lower. So let's see what the chart is telling us. Looking at the Euro versus US dollar, if we go back in time and take a look at these highs right through here, formed a ceiling here before breaking to the upside and finding support against that old ceiling here before moving to the upside. Now, in trading here today, we did see a rotation to the downside in the early European session, and the market price came down to the high of that old swing level through here near the 1.09421, and over the last 5 or so hours, we're seeing a move to the upside. That move to the upside was helped recently by the core PCE data, which came in at 4.1% in the U.S. That was less than the 4.2% expected and 4.6% last month. So better inflation data. The core PCE is the Fed's favored measure of inflation. It's still well above the 2% target that the Fed would like for it to see, but the trend is more to the downside, which is good news, at least in the short term on a relative basis. That move to the upside took the price above the 1.10267 level, which is the high of the swing area through here, and won't necessarily call it that great the swing area, but we did have a number of different swing highs through here, and then swing lows through here. Found support before moving to the upside, and then came down into that area in trading earlier this week. And use that area as a resistance here yesterday. So getting above it was somewhat positive, but you can see what's ahead. The 50% midpoint of the move up from this low right here to this high right here, and the 100-hour moving average. That's the blue line of the chart. Both of them near the 1.10539 level. The high price today didn't quite get anywhere near that. The high price today reached 1.10329, so still about 20 pips short of that. But as you start to approach a key resistance level, markets do get a little bit more cautious. But that level will be important going forward and into next week as a barometer for either bullish above and bearish below. We're currently trading just below the low of this swing area at 1.1011, or right at it, I guess. So there is some apprehension to move to the upside, and I bet you if I put a Fibonacci on this move from this high to this low right here, somewhere around the a little bit higher than the 38.2% retracement level of that move to the downside this week. This is the high for the week. This is low for the week. So staying below or the 38.2% at 1.10215 would be a more bearish bias here. So we are getting a lower dollar, but we are seeing some apprehension caused by the 50% 100-hour moving average, maybe the 38.2% retracement as well, and this swing area. We'll see how all that plays out. On the downside, move back below the 110 level. As you can see in the current hourly bar, we did find some support just above that level and near the 61.8% retracement. So if we move below that 110 level, that should open the door for further downside, and this swing area down here between 1.09618 and 1.09759 would be targeted. So buyers and sellers are battling it out. The dollar is lower. We'll see if that trend can continue today, but there is overhead resistance. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.